Hello there, chocolate muffin. Bitcoin halvening year. A big year for crypto, altcoins, everyone and everything. The frenzy and the fever starts. 3 out of 3 times, 2012, 2016, and 2020, the Bitcoin halvening year was green. Each time. We are now in a Bitcoin halvening year. Are we going to finish green this year? I hope. But I don't know. No one knows. I think, and I'm not kidding, I am the literal only person that I've heard in crypto who has said Bitcoin halving year could finish red. And I was talking about it from 2022 and 2023. I was talking about back then where I'm like, you know what? Something's going to break somewhere. Now, we don't know it's going to break that method. We don't know like what I mean by break, the 4-year cycle. We don't know. But there are some things lining up. I just want you to know that it's possible these snap us out of the 4-year cycle. The big one is obviously the stonk market. The US stonk market is basically summarizing every macroeconomic condition. It is what it is, okay? That's what basically you got to be looking at. And Bitcoin and its bull markets have always coincided with stocks. And what better forecaster exists than this? The yield curve, the 3-month and 10-year yield curve. So just in a nutshell, the yield curve, right, is just showing you the price of money over time. And when it inverts, which is the red line, red down here, you see this today, when it inverts, it means there are insiders who know something bad's coming. And what's happened is they know something that's coming is so bad in the future that they feel almost like it's a human moral obligation to tell their other insider scum bug eater friends. And what happens is their friends are all powerful and wealthy. And these people, for example, have multi-billion-dollar industry control, and they have to make decisions for the future based off whether they expand all their businesses or what they do with the workforce, right? These big macro decisions, right? So if they're told by their friend, they go, hey man, something really bad's coming in the next 18 months again, like really bad, okay? What happens is their friend, after hearing this, they go, oh man, maybe they didn't get told what it is. They don't know. They just said, hey man, something really, really, really bad. Just be careful in the next like 18 months. So their other bug eater friend, the little cicada bug eater, right, is a bug himself. He goes to his company and all his control of his wealth and power, and he says, man, I'm not going to hire all these workers for next year, right? Or I'm going to cut back on it. And they also say, I'm not going to expand my business to like, you know, the West Pacific Ocean and to do all these super deep stuff that's like really capital intensive. I'm not going to do that. Instead, what I'm going to do is I'm going to take that capital and just buy bonds. Okay. Now, when they do that, the market inverts. So that's why you see this line going here. Effectively, so these lines, inversions should technically make no sense. It means if you had 2 people, one of them wants to borrow money off you for 1 year, right, 12 months, and the other guy wants to borrow money off you for 10 years, the guy who's borrowing it for 10 years, they're more risky. So you say, hey man, you want to borrow money from me and you want to pay me back in 10 years? Well, you're like more risky, so you need to pay me back more. And then the guy who's paid you back for 1 year, like, oh yeah, 12 months, not much going to happen, whatever, it'll be fine, okay. This inverted yield curve, though, is the opposite. The inverted yield curve is this twisted world where that guy who borrowed off you for 10 years, you say, hey man, you only need to pay me back 2%. I trust you, okay? But that guy who's borrowing off me for 1 year, oh, screw him. I don't trust him at all. He's got to give me back 10%, okay? That makes no sense. You're saying, wait a minute, why is it that someone is borrowing you for 10 years, which is more risky? Why don't you care about the rates going? And now you know why. They're insiders, friends. Now here's the thing. I have seen every single freaking interpretation of the yield curve you can imagine. The guy who made it, I've seen all these like the insiders and the macroeconomists people in the middle, the left, the right, everyone, friends. They don't explain it like me. No one does, okay? That's why you like, subscribe, belly button, all. How they explain it is they go, it's a probability measurement by the market trying to figure out what goes on next, and it's interpolating all this data, and it's a magical unicorn. That's how they talk about it, okay? I say that's a bunch of yap BS, and I like the way I interpret it more because that makes more sense to me, okay? You know how I know I'm right? Because this has a 100% forecast rate of being correct for a recession, the yield curve. 100% every time. Okay. Now there was one where technically it didn't, but there was still a slowdown. It was just that the GDP got so close to zero, it just never went a tick under it. So it's basically 100% right. So you tell me, what seems more likely? That there's like the coincidental people out there who are just so good at measuring probabilities all magically compute this into the yield curve, which is basically them buying billions and billions and billions of capital moving around. Do you think that's more likely? Or do you think the scenario where there are insiders who know, oh, crap's about to hit the fan in about a year, do you think that's more likely? I think my scenario is more likely, okay? Because the way I see it is it's like a building on fire, but the person who starts the fire is always next to the exit. Isn't that crazy? How is it that there have been 5 buildings on fire and these people have been here every time, and these politicians, the insider bug-eater scum, they're always near the fire exit when the fire starts? That's very, very strange, isn't it? Well, that's exactly what I'm here to tell you. And you see this yield curve inversion? That yield curve inversion is them being next to the fire exit. So you might be like, did they start the fire? Doesn't matter. It doesn't matter where they started the fire. It's they knew the fire was going to break out. That's why you can follow them. But what's going to happen for crypto, right? Because 3 out of 3 times, friends, we finished green. I think the first Bitcoin halvening year in 2012, we had like a 13x rally for Bitcoin in that year. 13x, I think it was that, just from year to year. Isn't that crazy? And then the next 2, so 2016 and 2020, Bitcoin did about a 2x. Okay, so 13x, 2x, 2x, huge, right? What are we going to finish this year? If we finish at 2x, we finish 80,000 by the end of the year, right? That's one of the scenarios. That's one of the scenarios, friends. So we don't know what's going to happen, but you got to prepare. Okay, if we go up to $80,000 by the end of the year, sweet, we all win. If we don't, and we finish the year by going back down to 30 or 25 and tapping around and scaring everybody, if that happens, you and I still survive because we aren't leveraged to the gills. Everyone else might be. That's why if you are on leverage, you're going to get wrecked. And remember, it is not a guarantee for the 4th cycle to repeat. It is not a guarantee. However, it's repeating so far to the T. We are repeating so far. Even on the charts, man, I mean, it's kind of spooky and scary. This is the Bitcoin Mt. Gox Ponzi cycle. We are repeating the cycles exactly to the T so far. So this is why you have an appreciation for our friendship. I'm literally telling you, I don't think it's going to play out the whole way. But right now it is. Okay? So we got to prepare for both scenarios. And I don't really care. It's not about, like, friends, other people are going to gloat and they're going to say, oh, come sign up to my leverage trading referral link. They're going to do that, man. We can't fall into that trap. So before this yield curve inversion, I mean, every single time, and also there's some people I saw in the comment sections that they're a bit confused as well. When it comes to the yield curve inversion, the part going down is not the bad part. You understand? The part going down is actually the market and the tail end of euphoria. Okay, that's not the part going down. That is just the first, like, a section of the yield curve inversion part. So first it just inverts and it goes, okay, start the timer. Start the time. When you first go down below 0, you start going down each time, and then the expectation is, based off like the past, it's like you got 12 to 18 months now. Within the next 12 to 18 months, something bad happens. The part on the curve, friends, the part on the curve that goes up, this part, see the part going up, this is when the doom starts. This is when that doom starts. Now, why does it happen like that? It's because, do you remember your friend who borrowed money off you for 10 years and he only pays a 2% rate? And then that person who borrowed money off you for 1 year, who's meant to be like not that risky, meant to be, you make him pay 10%, a huge rate. Well, the yield curve going up. You see these green lines part? These are the green lines going up. That is the US Fed cutting the short-term rate so aggressive, it makes everything go back to the normal shape again. So remember, he was like a 10% rate for that short-term guy. Well, the US Fed comes in and they go, hey, we got to keep cutting and cutting and cutting. And they just chop, and the rate goes down. And also, the lag effect is real. You don't have a scenario where they push a button and everything works great. Otherwise, we would never have recessions. There'd been any uncertainty. It doesn't work like that. Okay, it's like an organic type, or it's an organic marketplace, collection of people and thousands of billions of variables going on, and that's what all makes the prices that we see in the markets. All right. So this inversion part, we're already done with that. Look at that. We are now. Look at this, friends. Look at this. We're curling up. We're literally starting to curl up. I know it's crazy, right? The most crazy of all was actually the zombie virus. This one, friend, this one is the most spooky of all. This one, what I'm about to tell you, is because how did the freaking yield curve predict the zombie virus? How did you do that? Look, it inverted, friends. Zombie virus, snap. So I don't know what's going on. It's a weird thing. Are we in a simulation, the universe? But it's like right in that point in time, something happens, right? Now, here's the thing, right? It didn't invert too hard, right? It didn't. That's because they cut so much so fast. If the US, remember the US Fed, if they didn't cut so much so fast, it would have looked even deeper. But I mean, you got to think about that. If this thing, right, knew a zombie virus was going to happen, or did they? That's what we'll never know. Did they know, like, the way they explain it, by the way, so one of the greats, like Jeff Snyder or the other guys, the macro guys, how they explain it is, and this is how I used to think of it at the start, it's still applicable. They go, well, no, the economy shows you, hey, we are in a weakened state now, and your guard is down. It's like you're in a boxing ring, and you're like, hello, the fighter has now put his hands right next to his waist. Okay, he put his hands next to his waist, and he's not protecting his face anymore. He was doing this, and now his hands next to his face. His hands are in his pockets. So if something hits him, it's going to hurt real hard. That's the metaphors that they use to explain it. Okay, so the best part is, whether you agree with that or not, or whether you think maybe it's a bit of both. Maybe the world is a bit more gray. Maybe it's a bit of it being a weakened stake, and there are insiders, and it is what it is. No matter what side you take, you can't deny that the inversion of the yield curve and in the uninversion part, the damage forecasts soon. We had the 1990s recession here. We had the US internet bubble bust there. This is crazy, right? By the way, this is really crazy, because on here was also, you have September 11th coming in here. This is wild, right? You also have the GFC. You have the zombie virus, and now here we are today. What are they going to throw at us next? Now, the thing is, right, if we go back, look at Bitcoin and the cycles, though. Bitcoin has only lived in, let's draw where Bitcoin was born, 2009, here. So, yes, we have only lived through the zombie virus on this. Now, what information can we gather from that? I'm not saying, by the way, so if you look at Crapo, friends, Crapo will say, well, we're going to crash to zero. So Crapo's initial reaction is like, well, okay, now we're all done and we're going to zero, and then we'll do that. That's his reaction. I don't know what's going to happen, but I know one thing. I've shown you many times. The whole bear thesis that you see out there is a repeat of the zombie virus, this candle here. Like, well, zombie virus, that's what everybody thinks is the bear case scenario. What if it's not? That's what I'm saying. What if it's a different scenario where it involves a longer amount of burning out, right? A longer amount of burning out sideways. Just throwing your mind into what's possible. You survive this if you're in spot. We already know. That's why, it's a race against time, man. Like, Bitcoin, it ain't going to do it for you. Wealth creation. Yeah, store of value, sweet. But it's not wealth creation anymore. Right, Bitcoin was number go up at the start. Now it's number go sideways. That's probably the next meme that's going to be coming for it. So I presented everything here for you just to keep our mind sharp. That's what we want to do. Keep the mind sharp. I never want to drink the Kool-Aid. Okay. When it's going down, I never want to believe it's going down forever. When it's going up, I never want to believe it's going up forever. You always got to maintain that fine line. And guess what? The best part is, most likely, if someone presented my case, they'll probably conclude by saying, and that's why I'm in stable coins and I'm never going to buy anything. I'm not like that. We're here to win. We're here to win. Win with ferocity and strength. I'm still long. I'm still strong. I know you like it. Long and strong, friends. Make sure you like, subscribe, belly button, all. Catch you very soon.